Everyone, good morning, good afternoon, good evening, depending upon when you're watching this video lecture. In the earlier session, we discussed some of the conceptual aspects related to earnings per share, that is AS20. Let us solve some of the problems of AS20 in the current session, but before that, let us quickly recapitulate what AS20 was talking about. Of course, EPS is a financial ratio which can be calculated using this formula: net profit or loss attributable to the equity shareholders divided by weighted average number of equity shares outstanding during the period. So computation of weighted average number of shares becomes important. Numerator can be easily calculated by taking the profit or loss after the tax, after the extraordinary items also being adjusted, after deducting the preference dividend also. But for the computation of denominator, we need to take weighted average number of equity shares outstanding during the period, which can be calculated by multiplying the number of shares with the time weighting factor, which is nothing but number of days or months the shares are outstanding divided by the number of days or months in the period in total. So that is a weighted average number of equity shares outstanding during the period has to be calculated carefully. And another important theoretical question that also we discussed in relation to the starting date from which the weight has to be calculated under different circumstances other than just shares issued for cash. Maybe shares are issued in different situations, and in those situations how the weight has to be calculated, from which date the weight has to be calculated, also we discussed a very important theory question that is. And in case of partly paid up shares, we have to just take the fraction of paid up value divided by face value. And in case of rights issue, we have to multiply the shares with right factor. Very important point that also. And in case the shares are issued by way of amalgamation in the nature of merger, then the calculation should happen from the beginning of the period, whereas if it is a purchase, amalgamation in the nature of purchase, then weight should be calculated from the date of acquisition. Bonus shares also should be calculated as if they were outstanding from the beginning of the year, even though those are issued somewhere in the middle of the year. That is about bonus shares, which is also an important aspect from problems perspective. And the most important of all in this entire standard is rights issue, wherein we have to multiply the number of shares related to every period prior to the rights issue with the rights factor, and that rights factor has to be calculated by taking fair value of the share immediately before rights issue divided by TERP, that is theoretical X rights price. Then how to calculate theoretical X rights price? We should calculate first the market capitalization or aggregate fair value of the shares immediately before rights issue plus rights issue proceeds whole divided by the total number of shares originally there plus rights issue shares. That will give us theoretical X rights price. That should be the denominator of rights factor, and in the numerator the fair value of shares immediately prior to the rights issue should be there. And after we calculate this right factor, that should be used to multiply with all the number of shares for the periods prior to the rights issue. That is a very crucial aspect of rights issue, and questions can very well be expected from that. But broadly, that is all related to basic earnings per share. Then coming to diluted earnings per share, which is not actually a reality, but still, which is a mythical calculation of what happens to the EPS if the potential equity shares have really become equity shares. So we have to identify first of all what are the dilutive potential equity shares, like convertible securities, options, warrants, etc. Then we have to calculate diluted EPS using this formula after adjusting the numerator also and denominator also. Numerator should be adjusted with any saving in the expenses or any additional tax burden or saving in the tax burden, as the case may be. So numerator, which is net profit attributable to the equity shareholders, has to be adjusted so that the impact of this potential equity shares probably becoming the real equity shares will be there on the net profit. How it will be there? That should be shown in the numerator. In the denominator, you have to take the number of equity shares, not only the original real equity shares, adding the potential equity shares also, as if those are now becoming real equity shares. So that is only a, once again, unreal situation, but possible situation. So that is diluted EPS, adjusting numerator as well as denominator according to the information that is given in the question. That gives us diluted EPS. Of course, diluted earnings can be calculated by taking the original earnings, add back the dividend related to convertible preference shares, along with DDT, that is dividend distribution tax, if any, and add back the interest that is saving minus the tax that is now not saved. So after net of tax, whatever is the interest that can be saved, that will be added back to the profits attributable to the existing equity shareholders, which was used for basic EPS. For that, these two adjustments can be done to get diluted EPS or diluted earnings in the numerator. Denominator definitely will be increased by the number of dilutive potential equity shares according to their timing and according to what could be the conversion ratio if those really were converted into equity shares. That is diluted EPS, another important aspect in the examinations. Of course, there could be some special circumstances other than convertible preference shares and convertible debentures, which are very straightforward. Some cases there could be options or any other share purchase agreements where there could be possibly some potential equity shares. The logic here you have to remember is, if those potential equity shares are issued at their fair value or even at average fair value, then there is no dilution at all in that. There is no problem with that. We don't have to even worry about them, just we have to ignore them. But if those options are issued at a price which is lower than fair value, to the extent of the difference between the fair value and issue price, that will be the amount of dilution. To that extent, the number of shares, potential equity shares, have to be calculated and they should be added in the denominator. Of course, because of this, there may not be any increase in the profit because we cannot ascertain the impact of this on the numerator. There might not be any impact. It is not measurable. Even in case of ESOPs also, numerator cannot be measured. What could be the impact additionally on that? But denominator definitely will have to be adjusted for potential dilution. In case the shares are going to be issued at no consideration, then what? Then entire amount of number of shares will be added to the denominator, because completely those shares, if at all those are issued for free, then the shares are fully dilutive. So the possibilities are three: either they are non-dilutive, or they are fully dilutive, or they are partially dilutive. In general, questions will be on the partial dilution. Fully dilutive, there is nothing special. They will just get added to the number of shares in the denominator. If it is fully anti-dilutive or non-dilutive, then nothing to be done. If it is partly dilutive, then to the extent of dilution, denominator has to be increased. That is also another situation we have discussed about options and other share purchase agreements, which might cause dilution according to the issue price and fair value of those shares. Then also another important point is, whenever there is a change like bonus shares, right shares, because right shares will also have a bonus element, so we cannot completely ignore that. Even right shares also restatement should happen, because that also has a bonus element. So bonus shares, share split, consolidation, etc. In all these cases, prior to the current year's financial statements, if at all we are showing any other financial statements also for comparative purposes, which generally will be for the last year, 2 years comparative figures are generally given by any company. So the last year's financials also, while presenting now, they should be restated if there is any change in the number of shares because of bonus, rights, split, consolidation, etc. Consolidation sometimes is also called as a reverse split, whatever the name may be. That will change the number of shares. That may not change any resources of the organization, but that will definitely change the number of shares, because of which earnings per share will be different. We cannot compare two earnings per share where without any impact on the numerator, just the denominator is changing. That doesn't make sense. That is why all the prior financial statements, whichever we are presenting now, we don't have to go back to 4 years, 5 years back and change all of them retrospectively. Not possible. We are not supposed to do that. Not required. It's only a presentation. Once again, you have to understand EPS is something that is calculated and presented. That's it. It has nothing to do with any recording. It has nothing to do with any kind of accounting. No such things are there in AS 20. So while presenting, naturally we will present at least 2 years financial statements side by side comparatively. So that other prior year's financial statement also, the earlier year's financial statement also has to be restated with its EPS. Other things will not change. EPS will be presented in a restated manner. That happens for both basic as well as diluted EPS. That is restatement. And disclosures is a theory question. Any type of accounting standard, this question can be asked. What are the disclosure requirements of dash accounting standard? Any standard, if there are number of disclosures, at least like 4, 5 or more, automatically that becomes a possible theory question. So you need to remember those questions, those points related to disclosures also, which are generally taken from the standard itself, not like specially we need to by heart them, but in general we have to understand, remember them, and should be able to reproduce them if a theory question is asked on that. That was AS 20 in a nutshell. Now let us move on to solving some of the problems related to accounting standard 20. So let us take the problems one by one. Question number 1. The following information relates to Messrs. XYZ Limited for the year ended 31st March 2017, and net profit for the year after tax is 75 lakhs rupees. Number of equity shares of 10 rupees each outstanding is 10 lakhs rupees. 10 lakhs rupees is given. Number of equity shares it is called. That doesn't make sense. Which means 1 lakh. Number of equity shares of 10 rupees each, we can say. Or we can say this rupees symbol is not supposed to be here. This doesn't match actually. It should not be this way. When you say number, this should not be there. But let us just forget about whatever is given. Let us just take this without the word number of equity shares. So let us call it as equity shares of 10 rupees each outstanding, 10 lakhs rupees. That means what? Number of equity shares will be naturally 1 lakh. Let us take it like that. Then convertible debentures issued by the company at the beginning of the year are like this. Numbers, this is clearly numbers, no rupees. 8% convertible debentures of 100 rupees each, 1 lakh such debentures, and equity shares to be issued upon conversion is 1 lakh 10,000. That is already given. And the rate of income tax is 30%. You are required to calculate basic EPS as well as diluted EPS. So straightforward question. And how to get 5 marks for this question? By just calculating something on calculator and throwing it on the paper, 5 marks will not come. So definitely you need to refer to the accounting standard. That is AS 20. So according to AS 20, basic EPS has to be calculated like this. You should write the formula for basic EPS and full forms, of course. EPS you can use as an acronym, no problem, but basic EPS we can call it. So how to calculate that? Net profit attributable to the equity shareholders divided by number of equity shares. So let us say 75 lakhs rupees. That is the net profit attributable to the equity shareholders, that is after tax given already, divided by number of equity shares according to us as we have taken it 1 lakh. So if this is the number of equity shares, then what is the basic EPS? Naturally 75 rupees per share. For that you need to write formula, substitute, show the answer. That is basic EPS. Then diluted EPS. Diluted EPS again you have to refer to AS 20, and according to AS 20, diluted EPS means the net profit adjusted for the dilutive potential equity shares being really converted into equity shares. What could be the net profit in the numerator? You can call that adjusted profits. Adjusted profit or adjusted net profit divided by diluted number of equity shares or dilutive equity shares, you can say. Total equity shares after including the dilutive potential equity shares also. So denominator is not a problem here. Why? Because it is already given. We originally have 1 lakh equity shares and equity shares to be issued upon conversion, that too at the beginning of the year. So no problem in calculating any weighted average of that. 1,10,000. So that means total number of shares is 2,10,000. That is in the denominator for calculating diluted EPS. But numerator is what? That has to be calculated. Do that in a separate working notes. So what are the original profits? 75 lakhs rupees are the profits originally. Now, because of this debentures, and once again, diluted means imagination. If these debentures are converted already, if at all those are converted, those are not converted. If those are converted, how many debentures would be there? 1 lakh debentures of 100 rupees each. On that, 8% means how much interest expenditure could have been saved. It could have been saved to the extent of 8 lakhs rupees. That will get added to the profit naturally, because to that extent we don't need to pay interest anymore. But on that, tax benefit of 30% will be lost. So net of tax, 30% of 8 lakhs is going to be 2,40,000. So what is going to be the adjusted profits in the numerator? 75 lakhs plus 8 lakhs minus 2,40,000, which comes to 80,60,000. So what is the diluted EPS now? 80,60,000 divided by 2,10,000. It is only 38.4, let us say, approximately 38.4. That is the diluted EPS, adjusted net profit divided by total number of shares after dilution. Original number of shares we have taken as 1 lakh plus new shares to be issued on conversion 1,10,000. 2,10,000 is denominator for diluted EPS, and 75 lakhs now becomes 80,60,000 because 8 lakhs interest can be saved. 2,40,000 tax saving is now not there, so that will reduce the profits. In other words, interest net of tax will have an impact of 5,60,000 net saving. If it is added to 75 lakhs, it becomes 80,60,000 in the numerator. That makes the diluted EPS as 38.4 per share. That is about basic EPS and diluted EPS calculation from the information that is given. The question itself was little not so correct, so just adjust the question in this way. It's not number of shares because the symbol rupees is given there. We cannot take it as number of shares. If number of shares is taken as 10 lakhs, then rupee symbol should not be there. So print mistake probably. So that is why we have adjusted the question to be 1 lakh number of shares of 10 rupees each, 10 lakhs rupees equity share capital. Taking that, EPS is originally basic 75 rupees, diluted is 38.4. That's it. Now, moving on to question number 2. While calculating diluted EPS, effect is given to all dilutive potential equity shares that were outstanding during the period. Explain this statement in the light of relevant AS. That's theory question once again. You have to write the diluted EPS for accounting standard 20. Naturally, whenever we are calculating diluted EPS, same thing you have to repeat. All potentially dilutive equity shares will have to be taken into consideration for the denominator. And also the impact of that dilutive potential equity shares really becoming equity shares on the net profits also has to be adjusted in the numerator. That is how diluted EPS has to be calculated. Like this, you have to just explain what is diluted EPS from a theoretical perspective. Then the computation is there. Also calculate diluted EPS from the following information. Only diluted EPS is asking. Okay. Even if basic EPS is asked also, what is the big deal? 1 crore divided by 10 lakhs. 10 rupees will be basic EPS if it is asked. Because here is only diluted EPS that is asked, let us take diluted EPS only. So 1 crore plus number of 10% fully convertible debentures of 100 rupees each, that is 1 lakh, and each debenture is compulsorily and fully convertible into 10 equity shares issued at the mid of the year, not at the beginning of the year. Earlier case it was in the beginning of the year. So now at the mid of the year. That means only for half of the year we have to take in the denominator. But definitely because of this, say 1 lakh debentures are there. Each of them is 100 rupees. On that, 10% means annually interest should be 10 lakhs. But current year it is only 5 lakhs because once again it is at the mid of the year, half of that. So that 5 lakhs can be saved definitely. Add that. But again, because of that, tax benefit we are losing. 30% of 5 lakhs means 1,50,000 that will be reduced from the numerator. So that is the numerator for diluted EPS. In the denominator, original number of shares are 10 lakhs. Anyway there. Plus, how many number of shares are supposed to be issued for, if at all these convertible debentures are really converted, each debenture 10 shares. 1 lakh debentures, naturally 10 lakh shares. But 10 lakhs in the mid of the year means we should take only 5 lakhs. In other words, 10 lakhs into 6 by 12. That means time weighting factor of 6 by 12. Then that makes it 15 lakhs in the denominator. And in the numerator, 1 crore plus 5 lakhs minus 1,50,000 means 1 crore 3 lakhs 50,000 divided by 15 lakhs number of shares. Then what is the diluted EPS? 6.9 rupees per share. Basic EPS would have been 10 rupees if it is asked. But diluted EPS is 6.9 rupees per share only. For this, each of them you can show the calculations differently, but ultimately answer is this. Once again I am telling you, presentation is important for accounting standards questions. Only just by doing like this, you will not get full marks. You need to elaborate, you need to write the answer for the theory question that is asked also. Then for each of them you have to write the formula. Then substitute one by one, show the calculation of numerator separately, show the calculation of denominator separately, then substitute, then show the answer. Little bit of elaboration is required for such type of questions, particularly when they are asked for 5 marks. Only for showing finally 6.9, you will not get marks. You need to show some reasonable number of steps and workings, most importantly. That was question number 2. Then question number 3 is the most popular or possible type of question. Any number of times this type of question can be given, and it was given also many number of times. Just because the same question with different numbers and different names of the companies are there, even if we solve 100 of them also, the way we solve will be same. So that's why we'll only focus couple of questions for practice, but very important, rights issue related question, always possible to be asked under AS 20. Following information is available for term limited for the accounting year 15-16 and 16-17. For 2 years the profits are given, 35 lakhs and 45 lakhs. Number of shares outstanding prior to the rights issue is 15 lakhs. And now the rights issue is there for each 3 shares outstanding. So 15 lakhs originally there for each 1 new share for each 3 shares means naturally 5 lakhs rights shares are going to be issued. 25 rupees is the rights price. Last date for exercise is 31st July 2016. And fair value of 1 equity share immediately prior to the exercise of rights on this day was 35. You are required to compute basic EPS. You are also required to compute restated basic EPS, not for this year, for the last year. Because of rights issue, we need to restate the EPS of last year also. That is asked. And basic EPS for the year 2016-17, that is for current year also we have to calculate. Perfect question for 5 marks. One by one let us calculate. But for all of them, for basic EPS we don't need anything related to 15-16, that is a straightforward thing. So first question answer automatically we can get by taking profit divided by number of shares. 15-16, how much was the net profit? 35 lakhs divided by, formula I have to write, of course, I don't have to tell that every time. 35 lakhs divided by 15 lakhs, that will be how much? Last year's EPS, basic EPS would be 2.33 per share. That is the answer for first question, straightforward. Then for second and third question we need 2 things. One is the right factor. For right factor, we need theoretical X rights price. First, let us calculate theoretical X rights price. You have to write the formula always. What is the formula for theoretical X rights price? Market capitalization before rights issue. How many number of shares are outstanding? 15 lakhs shares are outstanding before rights issue. What was the fair value of each share immediately prior to the rights issue? 35 rupees. So 15 lakhs into 35 means 5 crores 25 lakhs is the fair value of the shares, aggregate fair value before rights issue. Plus rights issue proceeds. Rights issue proceeds will be 5 lakh shares. Each share is issued at 25 rupees rights issue price. That makes it 1 crore 25 lakhs. Divided by total number of shares including rights shares. 15 lakhs plus 5 lakhs, 20 lakhs. So what is the theoretical X rights price that you should calculate? Do this calculation. 5 crores 25 lakhs plus 1 crore 25 lakhs divided by 20 lakhs number of shares. 32.5 is the theoretical X rights price. But that is of no use for us because we need it for right factor. What is the right factor? Fair value before rights issue divided by theoretical X rights price. What was the fair value before rights issue? Once again, 35 rupees. That was given. So 35 divided by 32.5. What is the right factor here? Approximately 1.08, we can say. Approximations are okay. Don't worry about too many decimals. 1.08 is the right factor. And this right factor has to be used for all the periods prior to the issue of rights shares. So let us do the second question. What is the restated basic EPS for 2015-16? Restated basic EPS for the year 2015-16. That was the second question. So of course, numerator is same 35 lakhs. Profit is not going to change. But denominator, what we should do? Number of shares are there 15 lakhs. That number of shares should be multiplied with the right factor. Then what is the restated EPS? First of all, 15 lakhs into 1.08 means that will be 16 lakhs 20,000. So 35 lakhs divided by this will give us 2.16 as restated basic EPS for the last year, that is 2015-16. Original basic EPS was 2.33 for 15-16. Now it is 2.16 restated EPS. Now basic EPS for 2016-17 current year. For that normal calculation only, but once again weighted average has to be calculated carefully in the denominator. Numerator is clear for 16-17. 16-17, 45 lakhs is the numerator. So here the numerator is very direct, 45 lakhs. Denominator has to be calculated. All these things you have to show separately, not directly in the formula. Should write the formula, show the calculations, then substitute. Divided by 45 lakhs numerator divided by. Now, prior to the rights issue, every period has to be multiplied with the rights factor. For that purpose, you should know how many months are there before rights issue. Rights issue last date for exercise is 31st July 2016, and we are talking 16-17 means financial year. So April, May, June, July. April, May, June, July, 4 months is there prior to the rights issue. 4 months. Prior to that, 15 lakh shares only were there. However, those 15 lakhs has to be multiplied with right factor 1.08 into 4 by 12. That is for prior to the rights issue. 15 lakhs into 1.08 into 4 by 12. Why 4 by 12? April, May, June, July. Only 4 months prior to rights issue. After that, naturally 8 months are there. So after that, total number of shares have become, instead of 15 lakhs, they became 20 lakhs. But those 20 lakhs are there for how many months? 8 months. So into 8 by 12. So that will give us the basic EPS for the current year 2016-17. So calculate the denominator first carefully. 15 lakhs into 1.08 into 4 by 12. 5,40,000. 20 lakhs into 8 by 12. 15 lakhs into 1.08 into 4 by 12. 5,40,000 plus 20 lakhs into 8 by 12. So both of them put together, that will become 18 lakhs 73,333. But 45 lakhs is the numerator divided by this. What is the Basic EPS now for the current year 2.4. That is the answer. 2.4 is the basic EPS for the current year by taking denominator carefully, multiplying the number of shares prior to the rights issue with the right factor. Of course, also with the time weighing factor for the current year, because those are there for only 4 months. Later on, the same shares became 20 lakhs. That is multiplied with the time weighing factor for the remaining number of months. So basic EPS for 16-17 is 2.4. These are the 3 questions asked. Answer for first question is 2.33. Answer for second question is 2.16. Answer for third question is 2.4. For this, workings have to be shown, formula have to be written. Perfect question that can be asked for 5 marks. Very good. Very repeatedly asked type of question. Now, question number 4. As at 1st April 2016, that is the beginning of the year, the company had 6 lakhs equity shares of 10 rupees each, but 5 rupees paid up by all shareholders, not 10 rupees, only 5 rupees paid up. On 1st September 2016, the remaining 5 rupees was called up and paid by all shareholders except one shareholder having 60,000 equity shares. In other words, up to 5,40,000 shares, everybody paid the remaining 5 rupees also. But see, one person who had 60,000 shares, he did not pay. The net profit for the year ended 31st March 2017 was 21,96,000 after considering the dividend on preference shares and dividend distribution tax on dividend totaling to 3,40,000, which is correct. So what is there for us to do? Unnecessarily, this is where people will be falling in the trap without reading properly. Add, deduct. Some numbers are there, add them, deduct them, multiply them. That's what people are so much interested in. Wrong. After considering dividend and dividend distribution tax, that should be the one, right? That is exactly what we want, and that's what is already given. So nothing to do with that 3,40,000, just ignore that. Profit is 21,96,000, that is attributable to equity shareholders. No problem with the numerator, that is given already. Question is about denominator. So we have to compute the basic EPS. Denominator is what is important. For that, we have to calculate weighted average number of shares, which is not same throughout the year because it was changing from one period to another period. So let us take one by one what is the story of these shares at a broader level. So first of all, this 60,000 shares whoever had, he never paid anything, right? That 60,000 shares guy, during the year he never paid anything, but already it was there, part of the 6 lakhs, 5 rupees only paid up. So this guy, 60,000, will have an equivalent of only 30,000 throughout the year. There is no difference in that. That will be the same. 30,000 is that 60,000 number of shares. But remaining 5,40,000, there is a point. Because for the remaining 5,40,000 number of shares, when was that 5 rupees called up? That was in 1st September, right? So that means April, May, June, July, August. 5 months. April, May, June, July, August. 5 months. 5 months. But how much was paid then? That was 5 by 10. But that was for first 5 months. But the same 5,40,000 shares, afterwards, for the remaining 7 months, they paid remaining 5 by 10. So for the first 5 months, 5 by 10 they paid. For the second 7 months also, they paid another 5 by 10. So the total is there for the 5,40,000 shares. This is for the first 5 months period. This is for the 7 months period. But of course, for the second half also, the 5 by 10 will continue, right? So in other words, we can say for the remaining 7 months, that is fully paid. Only for the first 5 months, it was partly paid, 5 by 10 only. For the remaining 7 months, it is fully paid. No point of taking here 5 by 10, again adding another 5 by 10. That will become full. So 5,40,000 into 7 by 12. So what is the total number here? That you should calculate. So 5,40,000 into 7 by 12. For those number of months, 7 months, fully paid, those are all 5,40,000 shares. Remaining 5 months, those are only partly paid. That is 1,12,500. Plus 30,000, that was already there. So here, this is only 4,27,500. Adding these two, The total number of shares in the denominator that we should take will be 4,57,500. Then naturally, what is going to be the 4,57,500. Just check that carefully. 540 into 5 by 12. Okay. 540 into 7 by 12. 427,500 plus 30,000. 457,500. Okay, fine. Then 21,96,000 divided by 457,500 means 4.8 rupees is the answer for this question. That's all. So only the question point here is denominator calculation. For the first 5 months, the shares were partly paid, 5,40,000 shares. So 5,40,000 into 5 by 12 into 5 by 10 only. For the remaining 7 months, they are fully paid. So 5,40,000 into 7 by 12. Plus, for the 60,000 shares, throughout the year, those are partly paid only. They never paid anything. So that is only 5 by 10. That is 30,000 is the equivalent number of shares. Total basic EPS for this company will be 4.8 rupees. That is the question number 4. Then question number 5, also similar, only related to weighted average number of equity shares we have to calculate. Multiple ways are there where we can calculate, but let us just quickly go through that. Balance number of shares he is telling 4,80,000. So let us take one by one the calculations. 4,80,000 number of shares are there. At that level, how many months those are all outstanding? April, May, June, July, August. 5 months, isn't it? So 4,80,000 into 5 by 12, that is 2 lakhs. Keep it aside. Then what happened? Equity shares issued for cash 3,60,000. So 480 plus 360, 840 now. 8,40,000 shares. At that level, how many months those are outstanding? August end they are issued. So September, October, November, December, January. Another 5 months. Another 5 months. So 8,40,000 into 5 by 12. That comes to 3,50,000. Then what happened? On 1st February, bought back shares are there. That is 1,80,000. So 8,40,000 minus 1,80,000. Of course, balance will be 6,60,000. That doesn't matter. But this 6,60,000 is there for how many months as a balance? 6,60,000 rupees will be there outstanding for how many months? Naturally 2 months. Why? Because at the beginning of the February only these were bought back. So 6,60,000 into 2 by 12. That will be 1,10,000. That's it. So the total weighted average number of equity shares for the purpose of denominator under AS 20 will be 6,60,000. Incidentally, it is the same as the closing balance. Not necessarily. Incidentally, it is same. Weighted average number of shares is 6,60,000. That's all. That is question number 5. Then, question number 6. From the following information given by Sampark Limited, calculate basic EPS and diluted EPS as per AS 20. Straightforward question. Net profit for the current year is 2 crore 50 lakhs. Number of equity shares outstanding is 50 lakhs. So what is there to calculate basic EPS? 2 crore 50 lakhs divided by 50 lakhs. That is 5 rupees. You have to show all these calculations carefully. Basic EPS 5 rupees per share. 2 crore 50 lakhs divided by 50 lakhs. Then number of equity shares is given. Number of 12% convertible debentures of 100 rupees each is 50,000. Each debenture is convertible into 8 equity shares. Interest expenditure for the current year is given already. Tax saving related to that is also given. So all that we need to do is for diluted EPS, you need to do the adjustment to numerator. So what is the net profit for the current year? 2 crores 50 lakhs. Interest expenditure saved can be 6 lakhs. Tax saving avoided or missed now is 1,80,000. So add 6 lakhs and deduct 1,80,000 in the numerator. What about denominator? Denominator originally 50 lakhs number of shares. Now each debenture is convertible into 8 equity shares, he said. So 50,000 into 8 means 4 lakhs. That means 54 lakhs is the denominator. That's all. Find out the diluted EPS. 2 crores 50 lakhs plus 6 lakhs minus 1,80,000 divided by 54 lakhs. So the diluted EPS is how much now? 4.71 approximately. That is the diluted EPS. You have to check this numbers also. In general, they will be very similar. There should not be like one basic EPS 50 rupees and diluted EPS 4 rupees. That much generally will not be the difference. So 5 rupees basic EPS, 4.71 diluted EPS looks okay. Calculations have to be correct. Then only the amounts will be finally answers also correct. So that was question number 6. Once again, 5 marks question means you have to write formula, show the calculations, workings, then substitute, answer, conclusion, everything has to be written and presented very carefully. Then only 5 marks will be awarded. Then question number 7. Following information is supplied by K Limited. Number of shares outstanding prior to the rights issue is 2,50,000 shares. Similar question on rights issue. And rights issue is what? 2 new shares for each 5 outstanding. That means naturally 1 lakh new shares are supposed to be issued at part of rights issue. Rights issue price is 98 rupees. Last date for exercising it is 30th June 2018. And fair value of one equity share immediately prior to the rights issue on 30th June is 102. Net profit is given 2017-18 and 18-19. That means financial year only is followed. So what is required is naturally same things. Mostly the basic EPS of last year, restated EPS of last year, basic EPS of current year. Same things will be required. First, let us take the basic EPS of last year, that is 2017-18, which is nothing but 50 lakhs rupees divided by 2,50,000 number of shares. So 50 lakhs rupees divided by 2,50,000 means 20 rupees is the basic EPS last year. That is last year 2017-18. Now to restate it also and to calculate basic EPS of 18-19 also we need 2 things. One is we need right factor, and then we need also for that purpose theoretical X rights price. Then what is theoretical X rights price? Aggregate fair value of the shares immediately prior to the rights issue. 2,50,000 shares into 102. That will be 2 crores 55 lakhs. That is the market capitalization prior to rights issue, plus rights issue proceeds 1 lakh. Number of shares at the rate of 98 rupees means 98 lakhs will be the rights issue proceeds, divided by total number of shares including rights issue 2.5 lakhs shares plus 1 lakh. That means 3,50,000 shares is the denominator for term. So 2 crore 55 lakhs plus 98 lakhs divided by 3,50,000 means approximately it will be 100.86, let us say 100.86. That is the theoretical X rights price, but that is not right factor. Right factor is what? Fair value divided by theoretical X rights price. That is 102 divided by 100.86. That is how much? 102 divided by 100.86 means, once again, 1.0113. More you take, more accurate the answer will be. Let us take like this because it's very small number. 1.0, just if you take it will be as good as 1. 1.01 also will not have much impact. Let us just take 1.0113 as right factor. Okay. Once you have that, then you can do restatement of the last year's EPS also. Like what? 50 lakhs rupees, which is there anyway profit, divided by original number of shares are 2,50,000 multiplied with multiplied with right factor 1.0113. So that will give us restated EPS for last year. So 2,50,000 into 1.0113. Denominator will be a little different now. 50 lakhs divided by that will give us 19.78 as restated EPS of last year. Earlier it was 20. Now it is 19.78 only. That is the restated EPS of last year. That is 2017-18. That's it. That is for last year situation. But current year situation is different. Current year situation 2018-19, let us say. For this purpose, numerator is not a problem. Numerator is once again as given in the question 75 lakhs. 75 lakhs is the profit. But denominator calculation is important. Prior to the rights issue, 2,50,000 shares are there. That should be definitely multiplied with 1.0113. But not only that, that should be multiplied with the number of months also they were outstanding. When was the rights issue happening? 30th June. That was the last date of exercising rights. April, May, June means 3 months prior to rights issue was there into 3/12. So for all the periods prior to the rights issue, the number of shares has to be adjusted with rights factor. After the rights issue is there, the shares now become 3,50,000 and remaining months are 9 months. So into 9/12. That's it. That gives us the basic EPS for year 2018-19. Calculate denominator first. 250,000 into 1.0113 into 3/12. Then 3,50,000 into 9/12. Denominator is 3,25,706. Then 75 lakhs divided by that will be around 23 rupees, 23.03, let us say. That is the answer for current year's basic EPS, 23.03. Last year's basic EPS was 20. Last year's restated EPS is 19.78. Current year's basic EPS is 23.03. Once again, I am telling you, these type of questions are the best possible questions almost from AS20. Many number of times those type of questions have been given in the exam. Now moving on to question number 8. From the following information relating to Y Limited, calculate EPS. Profit before VRS payments but after depreciation. 75 crores. Depreciation is given 10 crores, which is not required because already profit is calculated after depreciation. But VRS payments are 32.1 crores. Provision for taxation is 10, and fringe benefit tax, whatever taxes those are, they all have to be deducted. And paid up share capital is 93 crores of 10 rupees each. So we have to calculate basic EPS. This is more of a FM type question than AS20 question. So simply you can just take 75, right, minus 32.1 minus 10 minus 5. That is the profit available to equity shareholders after tax, divided by 9.3 crores number of shares. That's it. That will give us basic EPS. 35 minus 32.1 minus 10 minus 5 divided by 9.3 means 3 rupees is the basic EPS. That's question number 8. Question number 9. Compute adjusted EPS based on the following information. Adjusted EPS will be for the last year 9, 10, 7 lakhs 20,000. For the current year it is 24 lakhs. Number of equity shares outstanding until December 31st, 2010 were 8 lakhs. Bonus issue happened on 1st January 2011. 2 equity shares for each equity share outstanding at 31st December 2010. See, as far as current year's EPS is concerned, that has to be calculated like this, though it is not asked. 24 lakhs is the current year profit divided by total number of shares. For bonus shares, we have to take as if they are issued from the beginning of the year. Date does not matter for them. So 8 lakhs already there, and 2 shares for each equity share are issued. 2 for each, 1 share outstanding. That means 16 lakhs number of shares would have been issued. So 16 plus 8, 24 lakhs will be the denominator. That means current year CPS is 1 rupee per share. Last year CPS would have been how much? Normally speaking, 7,20,000 divided by 8 lakhs means 0.9. So last year's EPS 0.9, current year EPS 1. Are they comparable? No, they are not. That would be wrong because profits have increased tremendously. 0.9 to 1 doesn't show that increase. Why is that? Why? Because in the last year we have taken in the denominator only 8 lakhs. In the current year we have taken the denominator 24 lakhs. So now what we should do? We should restate the EPS of last year also, which is nothing but 7 lakhs 20,000 profit divided by 24 lakhs inclusive of bonus shares. So 7 lakh 20,000 divided by 24 lakhs, that will be 0.3. See, EPS increased from 0.3 to 0.1, not from 0.9 to 0.1. Those will not be comparable because of completely different denominators. So that is why we have to restate the EPS of last year while presenting it along with the current year's financial statements. That's it. So that is the question number 9. Current year's EPS 1 rupee, last year's EPS originally 0.9, but now restated is 0.3. That is bonus shares type of question. Then question number 10, the last question. RAM Limited had 12 lakhs equity shares on April 1st, 2009. The company earned a profit of 30 lakhs during the year 2009-10. Okay. Average fair value per share during this year was 25 rupees. Company has given a share option to its employees of 2 lakhs equity shares at an option price of 15 rupees. Compute basic EPS plus diluted EPS. See, it has given an option, that's all. If it was taken, then already they become real shares, right? So the diluted EPS concept will not arise then. First basic EPS, let us calculate, simple calculation directly. 30 lakhs rupees profit divided by how many number of shares are there originally? 12 lakhs number of shares are there. That's it. So 30 divided by 12. Simply 2.5 rupees is the basic EPS. Answer for first question. Then diluted EPS will not be that. Why? Because denominator will change. As far as this numerator is concerned, it is not going to change because of these ESOPs. That is the point we have to understand. The numerator is going to remain 30 lakhs only. Profit is not going to change. We may say that employees will work better, profit might increase, because we cannot quantify all that. We cannot argue those things. They are not valid for computational purposes. Practically they may be, but doesn't matter to us. So profit is remaining to be 30 lakhs, but number of shares is not going to be 12 lakhs because there are dilutive potential equity shares in the form of ESOPs. How they will be changing? So that has to be calculated with the dilution aspect of it. How much is the dilution aspect of it? 10 rupees, because average fair value is 25. Option price is only 15. So to what extent they will get diluted? 2 lakhs into dilution will be to this extent only. 25 minus 15 divided by 25. That means 10 by 25. To that extent, the dilutive capacity of them will be there. So 2 lakhs into 10 by 25 means 80,000 is the dilution potential that they have. Because to that extent only, the shares are issued below fair value or offered to be issued, let us say. So 80,000 is the dilution possible. So 12 lakhs becomes now what? 12 lakhs 80,000. That's it. What is the diluted EPS now? 30 lakhs divided by 12 lakhs 80,000. That will be 2.344, let us say. 2.344. That is the diluted EPS. Basic EPS was 2.5. Diluted EPS is 2.34 or 2.344. That is how diluted EPS has to be calculated in case of options. So these are the only possible type of questions. There could be options, there could be bonus shares, there could be right shares, and basic EPS of previous years to be restated because of right shares, and diluted EPS has to be calculated because of conversion, weighted average number of shares to be calculated carefully. Particularly, there could be even partly paid shares now becoming fully paid. All types of models which are possible to be asked in the examination have been covered here. Practice these questions carefully. Any one type of question with some different numbers using the same principles of AS20 can be asked in the examination. Very, very crucial. Standard problems will be definitely coming from this. Theoretical questions, broadly two questions are possible. One is date from which the weight has to be calculated, and the second one is disclosure requirements. Any of those two can be asked as theory question also. prepare well these things and get good marks from these standards with a thorough understanding, preparation, and remembering the formulae as well as the concepts, and beyond all that, good presentation in the examinations. That's it. We'll conclude a problems discussion on AS20 with this, and in the next session, we'll discuss another accounting standard. Till then, take care. Bye bye. Thank you very much.